Introduction. Rent-to-rent serviced accommodation has emerged as a lucrative opportunity in the bustling real estate market of London. With the increasing demand for short-term rentals, coupled with the city's status as a global travel hub, savvy entrepreneurs are capitalizing on this trend. In this article, we delve into the concept of rent-to-rent serviced accommodation, its benefits, challenges, and how to optimize its potential for profitability through effective SEO strategies. What is rent-to-rent serviced accommodation? Rent-to-rent serviced accommodation involves leasing a property from a landlord and then subletting it to tenants, typically for short-term stays. This model offers flexibility and scalability, as entrepreneurs can rent multiple properties without the need for significant upfront capital investment. Landlords benefit from guaranteed rental income, while tenants enjoy the convenience of fully furnished accommodations with amenities akin to those of a hotel. Benefits of rent-to-rent serviced accommodation. Minimal upfront investment. Unlike traditional property investments that require substantial capital, rent-to-rent serviced accommodation allows entrepreneurs to enter the market with relatively low upfront costs. High rental yields. The short-term rental market in London can yield higher returns compared to long-term tenancies, providing a steady stream of income. Flexibility and scalability. Entrepreneurs can scale their portfolio by leasing multiple properties, diversifying their revenue streams and maximizing profitability. Meeting demand for short-term rentals. With the rise of platforms like Airbnb and Booking.com, there is a growing demand for short-term accommodation options, presenting ample opportunities for profit. Challenges of rent-to-rent serviced accommodation. Regulatory compliance. Entrepreneurs must navigate local regulations and licensing requirements governing short-term rentals to avoid legal issues and fines. Property management. Managing multiple properties can be demanding, requiring efficient systems for guest communication, cleaning, and maintenance. Market saturation. The popularity of short-term rentals in London has led to increased competition, making it essential to differentiate offerings and effectively market properties. What makes investing in rent-to-rent serviced accommodation in London worth it? Investing in rent-to-rent accommodation in London can be worthwhile for several reasons. High rental demand. London is a global city with a constant influx of tourists, business travelers, and students. The demand for short-term accommodation is consistently high, providing a steady stream of potential tenants. Attractive rental yields. The short-term rental market in London often generates higher rental yields compared to traditional long-term tenancies. This means that investors can potentially earn more income from their properties. Scalability. Rent-to-rent accommodation allows investors to scale their portfolios rapidly without the need for significant upfront capital. By leasing multiple properties and subletting them, investors can diversify their income streams and increase their overall profitability. Flexibility. Unlike traditional property investments that require long-term commitments, rent-to-rent arrangements typically involve shorter lease terms. This flexibility allows investors to adapt to changing market conditions and optimize their returns. Minimal upfront investment. Rent-to-rent arrangements often require minimal upfront investment compared to purchasing a property outright. This makes it more accessible for aspiring investors who may not have substantial capital available. Low risk. Since investors are leasing properties rather than owning them, they are not exposed to the same level of risk associated with property ownership, such as fluctuations in property values or unexpected maintenance costs. Potential for value add. Investors can enhance the value of their rent-to-rent properties by providing additional services or amenities to tenants, such as cleaning, laundry, or concierge services. This can increase tenant satisfaction and command higher rental rates. Market resilience. Despite occasional fluctuations, London's property market has historically demonstrated resilience and long-term growth potential. Investing in rent-to-rent accommodation allows investors to tap into this market stability. Tax benefits. Depending on the investor's circumstances and location, there may be tax advantages associated with rent-to-rent investments, such as deductible expenses related to property management and maintenance. Entrepreneurial opportunities. Rent-to-rent accommodation provides entrepreneurs with the opportunity to enter the real estate market and build a profitable business without the need for extensive experience or qualifications. Overall, investing in rent-to-rent accommodation in London can offer a compelling combination of high rental demand, attractive yields, scalability, and flexibility, making it a worthwhile investment option for those looking to generate passive income in the dynamic real estate market of the UK capital. Is the popularity of this rent-to-rent business investment model worth it? The popularity of the rent-to-rent business investment model indicates that it can indeed be worth it for many investors. Here are some reasons why. Proven success stories. There are numerous success stories of investors who have built profitable businesses through rent-to-rent accommodation. These stories demonstrate the potential for success within the model. Market demand. The consistent demand for short-term accommodation in popular cities like London provides a reliable market for investors to tap into. As long as there is demand for temporary lodging, the rent-to-rent model remains relevant and potentially lucrative. Low barrier to entry. Compared to traditional property investments, rent-to-rent requires lower upfront capital and less financial risk. This lower barrier to entry makes it accessible to a wider range of investors, including those who may be new to real estate investing. Flexibility. Rent-to-rent offers flexibility in terms of property selection, location, and rental terms. Investors can adapt their strategies to changing market conditions and scale their businesses as needed. Scalability. The rent-to-rent model allows investors to scale their portfolios quickly by leasing multiple properties and subletting them. This scalability can lead to increased revenue and profitability over time. Diverse revenue streams. Investors can diversify their revenue streams by offering additional services such as cleaning, property management, and concierge services. This diversity can help mitigate risks and enhance overall profitability. However, it's important to acknowledge that like any investment, there are risks associated with the rent-to-rent model. Regulatory changes, market fluctuations, and unexpected expenses can all impact profitability. Additionally, success in rent-to-rent requires careful planning, diligent management, and a thorough understanding of the market. Ultimately, whether the popularity of the rent-to-rent model is worth it depends on the individual investor's goals, risk tolerance, and ability to navigate the complexities of the real estate market. For those who are willing to put in the effort and manage the associated risks, rent-to-rent can be a rewarding and profitable investment opportunity. Conclusion. Rent-to-rent serviced accommodation offers a compelling opportunity for entrepreneurs to generate passive income in London's dynamic real estate market. By understanding the benefits, challenges, and strategies for optimization, aspiring property investors can unlock the full potential of this lucrative business model. With effective SEO strategies and a commitment to exceptional guest experiences, success in the rent-to-rent serviced accommodation sector is within reach.